Allegations of insider trading in the non-fungible token space involving a former employee at OpenSea. That's the largest NFT marketplace. The Department of Justice saying yesterday that it had unearthed the, quote, first ever digital asset insider trading scheme. Joining us with more on the story is Yahoo Finance's David Hollerith. And David, this is kind of sending shockwaves across the crypto world, but specifically the details of this seem very interesting to me because insider trading and fraud can be a little bit of a blurry type of situation and distinction. What's the big takeaway? What are the details from this particular bust?
Yeah, Brian, it's totally blurry. And I think the thing to point out is this is a significant public case of insider trading in crypto. And it doesn't necessarily have to do with the security. And I'll sort of get into that more. But essentially, here's what happened according to the indictment. 31-year-old Nathaniel Chastain, who served as the head of product for OpenSea, which is the largest NFT marketplace by trading volume, was in charge and or part of the selection for figuring out which NFT would be featured on the homepage. Now, as the indictment states, the OpenSea's information about what would be put on the homepage was confidential, given that the price that buyers were willing to pay after these collections were listed on the homepage tended to rise substantially. Now, between June and September of last year, Chastain allegedly used the knowledge that he had about selection before it happened to purchase approximately 45 NFTs and typically sold them for anywhere between 2 and 5 times their initial value that he bought them at. Now, the incident was originally discovered back in the middle of September over social media, where Chastain was accused of doing these activities, and that mainly had to do with just random Twitter accounts who had sort of traced on the blockchain the transactions that looked like they were linked to his wallet. Now, to clarify, OpenSea, the next day after sort of these allegations started rolling out, quickly changed but let's say revised their employee policies to explicitly make it clear they could not trade on anything that was promoted on the homepage. And Chastain resigned soon after. Now, though, for this charge, he faces a maximum of 40 years in prison between one count of money laundering and another one for a wire fraud.
So, David, what are the implications beyond this? When you look at the broader sector, what are the ramifications you're looking out for?
Yeah, I mean, it's early to tell where this case goes, but it's definitely going to be one that a lot of lawyers will be following who are part of the space. That being said, it's not easy to get a practicing lawyer to weigh in on this case, at least as of yesterday, given that, it is fairly murky, as Brian mentioned. But the thing to note here is that Chastain's being accused of wire fraud and also money laundering. So typically what happens in the crypto sector is that it's not an uncommon practice for people to sort of lean on the fact that cryptocurrencies aren't necessarily securities and therefore aren't subject to insider trading laws. So a majority of insider trading laws are sort of managed or governed by the Rule 10b-5, which is, a part of the Securities and Exchange Act. But just a thing to note about this is that it doesn't really involve anything about whether or not it's a security. The whole point basically is that it looks like a security. I mean, it looks like insider trading, and even if it's not a security, prosecutors can still go after that. And I think that's going to be a wake-up call for a lot of investors in the sector.